Well, the European Central Bank on Thursday held a key interest rate at 4%. That breaks an unprecedented streak of 10 increases in a row. Evangelos Sipsas has more from Athens, where the ECB was meeting.
The European economy is weak and it will stay like this at least until the end of the year. That's what the head of the European Central Bank, Christine Lagarde, mentioned in a meeting on Thursday here in Athens. She warned that a weaker growth of the global economy will weigh on the Eurozone along with geopolitical tensions.
The euro area economy remains weak. Recent information suggests that manufacturing output has continued to fall. Subdued foreign demand and tighter financing conditions are increasingly weighing on investment and consumer spending. The services sector is also weakening further. This is mainly because weaker industrial activity is spilling over to other sectors.
While the ECBU continues to monitor the situation in the Middle East, it made a decision to freeze the interest rates at 4% at least until the next meeting in December, bringing an end to its unprecedented streak of 10 consecutive increases. The decision to pause a rate hike was widely expected in financial markets and aligns with the U.S. Federal Reserve and Bank of England. But Lagarde warned having a discussion about cuts is totally premature.
The totally unjustified war of Russia against Ukraine, which refers to the tragic development as a result of the terrorist attack on Israel. We are monitoring the situation. We are very attentive to the economic consequences that could have, whether in terms of direct or indirect impact on energy prices or the level of confidence that economic actors will continue to display.
Leaving interest rates untouched for the first time in less than a year is a sigh of relief for financial markets. But Christine Lagarde is not ruling out the possibility of further increases, saying it depends on how the fight against inflation goes. The European Central Bank is now expected to meet again in December. Evangelos Sipsas for CGTN, Athens.
Well, for a wider look at the state of Europe's economy, let's bring in Nicholas Economides, professor of economics at the Stern School of Business at New York University. Professor, welcome back to the show.
Thank you.
Well, we've heard about the rise in food and housing costs across the continent. Are we still seeing that trend, and are we also seeing rising costs in other areas as well?
Well, we see significant increases in rent and food. But in general, inflation has slowed down in most European countries, including France.
Well, how have Europeans been pushing back against inflation that's been driving some of these costs?
Well, there has been a lot of subsidies in each nation given to relatively economically weak people. But many people say that these are not enough. The real solution is higher growth, and to some extent the ECB decision in Athens this week paves the way because it doesn't increase further the cost of capital, doesn't increase interest rates any further, and that will help faster economic growth.
And are consumers cutting back on spending too to try to offset some of the effects of inflation?
Yes, consumers, especially poor consumers, are forced to cut down on what they can. Now, unfortunately, if you're really poor and most of your income goes to rent and food, there is not too much you can cut on. And that's the plight of the very poor consumers in a time of inflation.
Yeah, and some of those consumers have taken to the streets. We've seen protests throughout the year. What has been the impact of those protests on perhaps convincing the government to do more?
Well, the governments have intervened. Many of the European governments have intervened. They have given out money, subsidies to a lot of people. So the protests remind the governments that there are people who are hurting. I don't know how much more the governments can do. The best policy is faster economic growth. So the best policy is to have relatively low interest rates and fast economic growth, expansion of production, which will help everybody and especially the poor.
And are governments going to act in other ways down the road, or do you think that that's probably not going to be the case? They've done pretty much all they can right now.
I think they have done, as far as subsidies are concerned, what they can. At the same time, governments everywhere respond to protests, and if there are intense protests, they might respond even further. Let me also say that the recent terrorist attack on Israel and the countermeasures of Israel and of the United States have the potential of further slowdown on the world economy, and that will not be good, again, for the poor.
Yeah, that kind of takes me into my next question about how the economy in Europe compares to some of the other major economies, like here in the United States, for instance.
Well, the United States, in a strange way, started the inflation spiral, but because of the very severe intervention of the Fed, the increase of interest rates almost all the way to 6%, because of this intervention, inflation has slowed down a lot in the United States, while the economy is doing very well. We see almost full employment, we see high growth, and so on. So the United States is doing right now significantly better economically than most countries in Europe.
Economics professor Nicholas Economides, thank you so much for your expertise.
Thank you, Francis.